Is it too late to buy Dogecoin? You might be asking yourself, with the recent runs of Bitcoin, Ethereum, and even Dogecoin itself, have I missed the train? And in this video, we're going to look at two things. We're going to look at what basic economics and educational economics and microeconomics tells you. We're also going to look at what people in the industry are doing that are, let's say, whales or heavy investors in the coin. The entire reason I'm making this video is I think there's a lot of creators and basically everyone that owns the social media education and information about Dogecoin specifically on YouTube, TikTok, and other platforms are primarily making videos based on generating views, which makes a lot of sense, but it's not exactly giving you guys a clear picture of what you could be doing, because it's not financial advice, but I truly think that people are being led astray based on kind of what creates clickbait and things like that. So in this video, I'm going to give you guys a very real update for the beginning of 2025 of, is it too late to buy Dogecoin, and some predictions that we're seeing both from economists, what the market sentiment is driving, and just what people are basically estimating to happen that have real skin in the game. And that's what you should be looking at, because the whales that own it are the ones that are making big parts of the moves in terms of the price and price fallacies of Dogecoin. Now, if you find this video useful, or you find any of the other content on this channel about personal finance, early retirement, you name it, entrepreneurship, please consider subscribing. It's absolutely free to do. You just have to click a little button below. It really helps the channel. It really helps me produce more content and helps me grow the channel. So I really would appreciate that. And if anything else, just like the video, drop me a comment. If you have any questions, comments, whatever, in the comment section below. But let's get straight into it. So there's two kind of underlying aspects to the Dogecoin issue at hand. Is it too late to buy, or should you still buy? Well, economics, microeconomics, basically tells us that you should always buy. You should always dollar cost average into the market, or whatever asset class that you're willing to kind of put your bet on that it's going to return the best in the long term, right? So the real principle here is that if you don't ever buy, you're never going to be part of the race. And that is true to some extent. When we think that things are high, we might take the risk of waiting in hopes of a higher return. But at some level, as long as you're dollar cost averaging into an asset, it's always going to grow, or like that's at least the hope, right? If you don't think something is going to grow, why invest in it? And the same principle goes with other stocks like Amazon, Tesla, Nvidia. We all hope that they're going to grow, and they continue to hit all-time highs. And, that's how you kind of get yourself out of the hole of, if you buy a little bit every single day, eventually you'll make money on it, and you'll average out your cost in hopes that as the price fluctuates, because you're averaging your buy-in price, you'll have a better price long-term. Now, economics is great, but we are in a weird place where Bitcoin and Ethereum are at the highest points that they've pretty much ever been. They're in the upper quadrant of what they've ever been valued at. And because Bitcoin and Ethereum kind of control the rest of the cryptocurrency market, Dogecoin being one of those biggest cryptocurrency players, biggest crypto players, Dogecoin is coming up. It's being brought up by the great success and kind of the great market valuation of Bitcoin and Ethereum. And the question becomes, is Dogecoin's price right now, today, or whenever you're watching this video, is it real? Is it inflated? Is it real? Well, I can't give you that answer, right? And I like to be, like many economists, I truly believe the market has priced in every eventuality. There are very rarely times where that's been wrong, but there have been times where people have taken advantage of it. Wall Street bets, etc. But you could also say that Wall Street bets was a market advantaged play for those that saw a kind of fallacy in the market and they took advantage of it, but they played the game, and the rest of us, while we were cheering them on, were the losers of that outcome. So the same thing is true for every other stock and player within that stock or asset class, whatever it is. And here's where it gets interesting, right? Because of the success of Bitcoin and Ethereum, and Dogecoin being that one crypto asset that those two seem to constantly pull up with almost like an elastic string between the two of them, a lot of people are basically hedging the bet that Dogecoin is going to have a strong calendar year. People are also strongly looking at the influence that Elon Musk currently has with the change in government power and what's happening, and people are hedging the bet. Big players, people with lots of skin in the game here, are hedging that Elon might resurface comments about Dogecoin, which might kind of bring an influx of, let's say, retail buyers like it did before when Dogecoin first rallied its first couple times, and people are guessing on that. Is that gambling? Absolutely. But People with real skin in the game are doing that. So basically, I just wanted to make this video to give you, those are the two places people are at. And there's nothing else, right? You might say, oh, that was super simple. That was, you know, that's not telling the full story. That is the entire story. Economics says dollar cost average into an asset you believe in. I'm not going to tell you whether that's going to go up or down, right? Because VOO or Tesla or Apple might go down. You never know. It's like Intel, IBM, Yahoo. There have been these big unfailable companies that have always gone, you know, that have crashed and have gone down. And I can't tell you that anything is going to go up. But if you believe in it and it's something that you want to put your money into, dollar cost average into most asset classes you have. Unless you're comfortable just throwing it all in there and eating the waves that it's going to go, right? Personally, I can tell you what I'm going to do. I'm in a position where I'm going to take the risk and wait, but I completely understand that I'm really rolling the dice here. I'm hoping that two things are going to happen. One, Dogecoin at the end of the year is going to be higher than it's worth right now. And two, it's going to have a bit of a drop when we see a Bitcoin drop in the near future, and I'm going to wait. I might miss the entire opportunity to invest in Dogecoin and make that a smart financial decision for myself because I'm taking the risk here. But that's my risk tolerance and that's my current plan. Dogecoin is one of my riskier plays in my portfolio right now, so I'm just doing it because it has a high potential yield of return if I take that risk. But the two sentiments here are economics says dollar cost average, and I'm not giving you financial advice. That's just what economics and educational economics would say. Any economist will say that pretty much. Or what people with the most skin in the game relative to Dogecoin, because those are the people that you really need to model your investing off, because if any of them pull or sell, we got a bigger problem. Dogecoin is going to go down. Those people are kind of reinvesting and rebuying, repurchasing their shares that they owned prior. You know, there are a lot of buyers in Dogecoin that owned quite a substantial amount of Dogecoin at that high of, you know, when SNL happened and all that kind of stuff, and then they sold some off. They are now rebuying, which is, you know, interesting market data, but it's something you should look at because you're honestly investing in those people because those people are high earners and high owners of this asset class, and they're whales for all intents. And I'm not talking that there's like 3 or 4 people out there. I'm talking about the upper 25% of the people that own Dogecoin, which represents the vast majority of Dogecoin ownership. So they do make a big play. Like any other stock, this is not unique just with other stocks. It's corporations, it's funds, it's all these other things that drive stock. If a big fund pulled out of Apple, Apple would absolutely have a downturn, just like Dogecoin. So you're kind of investing in other people's perspective, and I'm not going to go into how the stock market works because we're quickly getting ourselves into that. But I'm going to end the video now. I just want to give you guys the only thing that's real and the only thing you should look at as you're going in. Now, you can do more research, but if somebody is telling you, like every other creator out there, that there are these hidden things or blah, 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 or trying to hype you up and get your heart rate up and get you excited and whatever it is, they're doing it for views, right? So just understand that, and I'll see you guys in the next video.